Good morning, I'm Philippa Shipley, Product Developer at Global Investor Group, and it is my pleasure to welcome you to the Future Exchange Landscape 2021 panel. Today, we'll be exploring the opportunities for exchange groups this year with our esteemed panel of guests. Moderating this session is Peter Oakes, founder of FinTech Ireland. Peter is a financial services expert in banking, payments, fintech, regtech, cryptocurrencies, and distributed ledger technology industries. With Peter, we have guests from Cboe, All Options, and APT. We encourage you to ask questions to the panel, which you can do via the Q&A function on your screen. Please remember that these sessions are being recorded and will be available to view on demand. I'd now like to hand over to Peter to get us started.
Well, thank you very much, Philippa, and good morning. It's great to be here, and thanks to the team, Global Investor Group, and for FOW Derivatives Forum. It's a pleasure to be here. As Philippa said, we'll be looking. I'm joined by a group of experts on this panel, and what I'd like to say is that we'll be discussing the future exchange landscape in 2021 and beyond today. As Philippa said, she gave my background. I'm a non-executive director of regulated financial services firms here in Europe, including one that actually works in the area of options and trading. But predominantly my experience in MiFID and all the rest originally came from being a central banker and also a regulator. But please don't turn off this panel session now. I promise you I will make it entertaining. Now, I'm joined by, as I mentioned, a panel of experts here, and I'm going to introduce them very briefly, and then in turn I'll go back to them, and the panel will let you know who they are and a bit more about their background. So, first of all, Matthias Paz is with us. Matthias is director at the Association of Proprietary Traders, and in terms of that which was established, I think, Matthias, in 2003, and it's around 23 or 25 independent proprietary trading firms based in the Netherlands that your body represents, and I'll come back to you in just a minute. Also joined there by Martin. Martin Pollock. Martin is the Chief Operating Officer for All Options. He started as a derivatives trader back in 2012, so he's no spring chicken. And he's also in the current role as COO, responsible for the execution of All Options vision in trading. And last but surely not least, the Cordell, and forgive me for that. He is president of Cboe Netherlands. I'm sure that if you've been looking at media and news in this area, you've seen a lot of traffic coming from Cboe as they gear up their announcements. They're a Netherlands-based exchange launched in October 2019 and will be the future home of Cboe Europe Derivatives. Gentlemen, as I said, our panel is all about the future landscape of exchanges in 2021 and beyond. But Matthias, what I'm going to ask is that you and each of the panel members may just do a little bit more of an introduction about yourself, but also then perhaps mention one or two points that you intend to get across during the course of the next 45 minutes. And while you're doing that, I'm asking the audience, will they start to have a think of some of the questions they may like to ask us as you hear the introductions. Over to you, Matthias.
Thanks very much, Peter, and hello, everybody. Pleasure to be here, honored to be here. Peter already mentioned a little bit about APT. APT is the Association of Proprietary Trading Firms here in Amsterdam, the Netherlands. Currently we've got 24 members, large and small, from Optiver, IMC, flow traders, homegrown Dutch market makers, to smaller specialized proprietary trading firms. We also have quite a lot of Brexit firms, Anglo-Saxon firms, who've joined us in the last couple of years due to the developments around Brexit. And what our members do is provide liquidity on exchanges in the EU, in the UK, and all over the world. Most of them as market makers, others also as day traders. And it's really quite a Dutch speciality, specifically to be a market maker in options. which we've been doing for the last 400 years, which has become big really with Amsterdam becoming the first standardized options exchange 40 years ago. We're proud of the liquidity providing role we take, providing liquidity even in difficult circumstances, such as the Corona crash last year, February and March. And coming back to your the points I would like to get across, and also what we believe in as an industry, as a Dutch industry, and as an association, is I think very much competition and innovation. That's a sort of starting point for everything. Competition between market makers has led to innovation and also spreads and narrowing the last 20 years with more than 50%. From competition, and the starting point of competition, we also very much believe in transparency and on exchange trading, at least for the smaller sizes, because that stimulates price formation, and it also enhances retail investor safety because of central clearing. And thirdly, that's also, I think, quite a Dutch thing, is that we're a strong believer in a common European market, a true capital markets union, because it brings down barriers to trade. Instead of fragmentation, it's good to have a big European market rather today than tomorrow.
Sorry, thank you, Matthias, for that. That was great. Sorry, I had my microphone on mute. I'm sure the European Commission will be delighted to hear you mention innovation and financial strategy, given that's now the cornerstone of the Digital Financial Action Plan released last year. I'm going to now turn to Martin Pollack. Martin, over to you, sir. A little bit more about who you are and also some of the points you'd like to address today, please.
Yes, thank you very much, and good morning, everyone. Like I said, my name is Martin Pollack. I'm working now since 2012 for All Options. I'm actually homegrown here, and that's what a lot of Dutch market makers actually do. They grow up their own traders and further. We are a European market maker, solely focused on options trading. That's also actually why the name is All Options, of course. We are focusing on all the markets, actually on-screen markets in Europe, and also are looking into the US right now. At All Options, we believe that it's important to have a holistic view on markets. We too often see actually that and hear that market participants arguing solely for the support of their own business model. And we believe that's detrimental for the structural improvements of the market. In our dialogue with exchanges and regulators, and also actually with the members of APT or the APT themselves, are we also a member of, we strive for transparency and aim for a market structure that allows for the best liquidity at the lowest price. And it's always putting the interest of the end users of the markets first. In our view, and that's actually opposing a view of a lot of other participants, we oppose bilaterally traded products, monopolistic pricing by exchanges for their data, and also dark markets. And we advocate passive liquidity protection like speed bumps, which is, well, most parties do not really openly support that. We believe that central and lit markets with a healthy competition and diversified array of liquidity providers is really important. And in an ideal world, and most people will laugh when I say this, but I keep on mentioning it because I think that's the future. But in an ideal world, there's only one non-profit tech platform where all market participants execute their orders in a transparent fashion with the sole purpose to serve the end client. So instead of the exchanges like we have it right now, we believe that there should be just one tech platform where everyone can trade.
Martin, thank you very much for that. And thanks for that point, because we will unpack that a bit further as we go through the session till 11:30. Adi Cordell, you're there with us, aren't you? Yes, I can see you. Adi, over to you, a little bit more about yourself. And as I mentioned, a bit about Cboe actually in the media of late.
Thanks very much, Peter. And hello to everyone who's joined this webinar. So my name's Adi Cordell. I'm president of Cboe NL, which is our Amsterdam-based exchange. It'll be the home of Cboe's derivatives offering in Europe. And it's something we're looking forward to launching in September of this year. as part of this webinar, I think some of the things that I'd ideally like to get across is really how Europe can actually be at the center of innovation and how Europe can actually grow the suite of products that are available to market participants. I think Europe has lagged the US over the last few years, and I think now's probably the right time for change in Europe. Very interested to hear Martin's point about perhaps ideally one venue or one tech platform where all market participants can coalesce around that and trade. I think as a relatively new exchange moving into Europe, clearly that's not something I'd agree with, but looking forward to a good discussion around that as the webinar goes on. So that's me. Looking forward to continuing the conversation.
Thanks, Adi. And Matthias, thanks, and Martin. So folks, just a quick reminder, do shoot your questions in utilizing Swapcard, and we will get to see those questions as they come through. In our pre-panel discussions with our audience, with the panel members, we did say we want to make this as interactive as possible. So we will give you a little bit of visual stimulus as we go through the session. Now, what I'd like to do is I'd like to turn to Matthias, and I'd like to ask him if he would be so kind as to maybe just set us up and talk us through a little bit about the current landscape of the exchanges currently in Europe, and have a few words. Martin is probably going to pop in with a few more words on that point as well, and then Adi will be taking us through some particular points as well with the presentation. So, Matthias, and I know Philip, if you're there in the background, are you able to flip up that image for us? And Matthias, over to you.
Great. Thank you so much. Yeah, this is actually a picture of the equity exchanges. So where you read LSE, I don't know if you can see it in the top of the picture. Please consider that to be ICE, and Deutsche Börse, together with Eurex, of course. What's interesting, because we were talking preparing this, is there any room for more consolidation on the current exchanges in Europe, and basically the conclusion was that there is not a lot left to consolidate, as we've been seeing, and that's the sort of darker, not the darkest green, but the sort of the somewhat darker green, which is Euronext. Of course, we've been seeing a consolidation there over the past couple of years, now with which has come to a interesting finale, maybe, or maybe it's going to go on, but with the acquisition of the merger with Borsa Italiana, now Euronext, consisting of the Amsterdam Exchange, Brussels, Paris, Dublin, Lisbon, Milan, Oslo. So that's a very impressive it's become nearly a pan-European exchange. I think also very much politically supported by President Macron, who sees it as an example of a pan-European project. And next to that, of course, you see the strong Deutsche Börse together with Eurex. And interesting, of course, the SIX acquisition of the stake in BME. So where there's still room, maybe there are some small number of independent exchanges left in Athens, Warsaw, Budapest. I think you've got Stuttgart with a specialized exchange for structured products, but that's about it. And what we'll probably be seeing is that Euronext is concentrating the next 18 months on the acquisition, the merger with Borsa, the 4 billion euro merger, and LSE will be very, on the equity side, very busy with Refinitiv. So Euronext consolidation of the Optic platform, and then maybe after 2022, 2023, you might see some more change coming with possibly acquisition of new countries, other sources of income, maybe some more sophisticated data products coming along because of acquisitions such as the LSE Refinitiv one. What you might see, but that's very speculative, is bigger exchanges from outside Europe, CME possibly, or the Hong Kong exchange, looking towards Europe and seeing if there is any room for acquisition there. But then, of course, national interest will pop in as well. And I think Martin's idea of one big pan-European exchange, well, Cboe is of course, it's very interesting what will happen there with their opening of their derivatives, pan-European derivatives exchange in Amsterdam, which we very much stimulate. And of course, yeah, thinking the unthinkable, you could also see maybe possibly once in the future when we've made more steps around the capital markets union, a merger of Deutsche Börse and Euronext even to a sort of Airbus like pan-European company. But all that's a bit of a speculation. So maybe hand over to Martin for some more thoughts on this.
I can jump in actually. I wanted to
Please.
let you finish first. Because what annoys me actually most about this picture and about all the consolidation that we see, at least across Europe, it doesn't seem like the exchanges have the interest of the market in their minds. It looks like Euronext, in this example, they try to create the biggest market cap they can, and actually not focusing on bringing extra liquidity to the market. So you can buy whatever other exchange you want. It doesn't improve the market as a whole. So I do understand that the exchanges want to become big, and actually what I'm saying with there should be one exchange, well, that's an extremely bad idea if that one exchange has the only objective to have high profits and high market cap and just a monopolistic view on the whole market, because then we're all the playable of that one exchange. Actually, that's already what in my view the exchanges are trying to do a little bit, but now competing with each other, buying other exchanges, becoming bigger and bigger, but still not improving the market. And I think that's not the way you want to go forward. No one really profits from an exchange that just has the only objective, or maybe not the only, but a big objective to make money on, for example, market data that they're charging then to their clients or to market makers, liquidity providers who actually provide that data themselves. And I think the more consolidation you will see in the current way they are doing it, I think it will only become worse. And the focus on market structure and the focus on liquidity and an increase of liquidity, attracting more capital to the market, attracting other parties to the market, attracting new flow, that's what it should be all about. And that's something I'm completely missing in at least the view or the vision what I see for the exchanges in Europe. I think that's a huge problem that we're all dealing with and have to deal with. And then we need to talk about liquidity. Well, actually, the exchanges should focus on something completely different than just becoming big to charge more for data.
Yeah, no, that's thanks for that, Martin. I mean, I take away those points there about liquidity, the scaling of the markets, and also the deal flow. And I guess maybe the outcome is supposed to be driving greater efficiency and effectiveness is probably what the other argument is, and therefore better service to the end users. But I think you make your points quite well. What I'm struck before I just turn to Adi is the fact that a few years ago I went out of my way and I bought all these domain names and set up groups with the word fintech in them, and I think I missed the trick. It actually looks more like it's tech fin to me. Technology, which happens to just be pointing at financial services. Adi, I think that might be a natural segue into you, sir. Can you hear me, Adi?
I can. I was just coming off mute, so
sure.
The usual problems that we've had during this pandemic, where everyone's talking and someone's on mute. So I was guilty of that. So apologies. Yeah, interesting debate between Matthijs and Martin around the consolidation in Europe. In many respects, I think you do need exchanges to compete. You do need, having just one venue will not stimulate innovation, will not stimulate competition. And I think those of us who've perhaps gone through an era where state-owned entities have perhaps governed particular sectors, what tends to happen is you tend to have poor service, no innovation, no investment. I generally believe in competition. I'm very much a free marketeer, very capitalist in my views on things like that. But switching to Cboe and switching to what our plans are. And so I kind of wanted to share a couple of slides with everyone, just to highlight some of the points that we're discussing today.
Might just see Philippa, if you're in the background there, if you'd mind sharing those slides. There we go.
Hopefully you can see that. If you can see this slide, so the title is somewhat combative, i.e. what has hindered growth in Europe? I'm looking at one particular asset class, one particular product within asset class, which is equity options. And by equity options, I'm referring to index, single stock, and ETF options here. And what we've looked at here is over the last 10, 11 years, what does Europe look like when you compare it to the US? So let me just explain this chart in more detail. Have a look at just the bottom boxes for a second. So the GDP in 2019, could potentially use 2020 for this as well, but let's say for 2019, GDP for the United States is roughly a $21 trillion economy, and Europe, you could say broadly similar, so 19 trillion, but let's say that we're pretty much on par. And by Europe, I am still referring to Europe, including the United Kingdom, and so very much old school in the way I'm thinking about Europe here. But then have a look at the options markets. And so think about the economies, relatively the same size, then have a look at the options markets. Look at 2009, first of all. Now, the gray and black bars represent Europe. The black bars are single stock options and the gray bars are index options. And in 2009, you could say that the United States and Europe are roughly around about the same size in terms of value of options traded on the various venues. So the green and blue bars represents the United States. So that's 2009. Now, look, 10, 11 years from that period, and there's a distinct and obvious pattern. The United States value of volume has grown pretty much year on year. There's the odd dip, but the direction of travel is pretty clear. It's on an upward curve. Now, we haven't plotted 2020 here. 2020 was a record-breaking year. So 2020 numbers would actually be even higher than this for the United States. Now look what's happened to us in Europe, the gray and black bars. Our value of volume has largely, I would say, flatlined. You could say it's somewhat trending down. And so what's happened? What's happened to us in Europe such that in 2009, we're roughly around the same size as the United States. But since then, the value of our options markets, the value of volume transacted, has largely stagnated. And I think this is really what we at Cboe are trying to address. We think there's an opportunity here for us to actually bridge the gap between what's happened in Europe with what we see is happening in the United States, i.e. volumes growing in the United States, stagnating in Europe. A new entrant could actually, we believe, help to grow the overall market in Europe. And so you could say it's partly competition, but it's also partly an opportunity. Now, the question is, how are we going to address that? And this is the second slide, which I want to talk to. And this is really just a subset of what's happening in Europe in terms of options trading. I've only taken a subset of indices and just want to show you what we're planning and what the current market structure looks like. And so on the left-hand side, where you can see the country flags, all orbiting around Cboe and Euro CCP, the clearinghouse that we purchased in July of last year. So our approach is very much going to be a pan-European approach. So very similar to our cash equities exchange, which has had a pan-European approach pretty much from day one. And clearly we're very successful in obtaining significant market share in equities trading with a pan-European approach. Now, with that pan-European approach, we can obviously develop our own indices, and we've decided to launch futures and options on our own indices, so using our own data. Now, what that means is you can actually get to transact futures and options referencing 5 different countries and a pan-European product on one venue. Whereas if you had to do that today, without Cboe being around, you'd actually do that on 3 different venues, 3 different clearinghouses, 3 different pricing structures, and not really much competition amongst them. We think that structure has, in many respects, is what's inhibited the growth in index options trading, but also some of the underlying structures around largely bilaterally negotiated transactions as opposed to an order book driven model. So I'll stop there, and I'll stop sharing my screen for a second, and hopefully this will spur some debate amongst us.
Certainly, I think it will, and I'm going to jump back to Martin and Matthias in just a minute. But one thing which struck me, and I might ask you that, Adi, is that, you know, looking at that chart and just looking at the first chart, one could say, oh well, maybe that the US market has saturated. The area for growth now is Europe. Second thing, as you point out, not plotted 2020, and I was just curious, given the volatility in Q1 going into Q2. Given the impact of COVID last year, we all know that there'd be a lot of volatility back then, and what the chart may look like. And then I guess even now a current question would be, I wonder what this quarter compared to that quarter last year is going to look like. So yeah, the first question I had for you just would be, is it that the US market is saturated, therefore Europe's a great place to grow, and you're going to eke out the efficiencies, as you mentioned, your own data? And also, yeah, just a rough idea what you think 2020 could look like. Appreciate you can't give away any proprietary or confidential information.
Yeah, sure. So on the first point, I don't think the US is saturated. And so if you'd asked me this question 10 years ago, I probably would have said, yes, it is. At that point, I think there were 6 options exchanges in the US. Okay. Today, there's 16. So I might have a view that it's saturated, but you can see what's happened over the last 10 years. So you've gone from 6 exchanges to 16. Volume growth continues throughout. They compete with each other very aggressively, be it on price, be it on market structure, but ultimately you could trade certain products, so certainly single stock options on all of those venues, all cleared into one silo. But the US is a very vibrant country for trading options. We tend not to have that options trading mentality over here in Europe as much as in the United States. And I'm talking about from a retail perspective. Amsterdam, I would say, is the outlier here in that Amsterdam clearly, I shouldn't say Amsterdam, I should say the Netherlands, actually. So the Netherlands in particular does have a history of options trading, and probably more closely mirrors the US in that respect, albeit the economy of the Netherlands is clearly not on the same scale as the United States. And so I think the US is not saturated. There are opportunities in Europe, so that addresses the first question. On the second one, comparing, say, the first and second quarters of last year versus this year, actually, I think what the figures for the first quarter have shown is that, yes, there's been a dip on some of the exchanges, but actually volumes have still been extremely good for the first quarter. We'll see how the second quarter plays out, but the first quarter volumes have been strong in the United States, even compared to a very, very turbulent Q1, certainly February and March of last year, as we went through the pandemic.
Thank you very much for that, Adi. Martin, were you looking to come in there?
Yeah, I am muted already indeed. By the way, the Netherlands is often referred to as the capital of Amsterdam, I believe, in US. So I think you're not the only one who's making that mistake. But that's besides the point. The funny thing is actually this. So if you look at the picture that you just showed, we do not have to get it back, but this pan-European view, that's very close to actually what I'm mentioning about having one tech platform. I think the biggest issues that we have here indeed is that there are so many barriers to trade on let's say all the bigger products that we have in Europe. I think that's also the biggest difference between Europe and the US. So yes, there are a lot of exchanges there, but there's only one clearing site actually with OCC there. So it's very easy as a retail investor or a professional party to actually trade, because it will be all netted or settled on one place. And I think that's also why we support Cboe, by the way, in this initiative. It's not because we want per se only one exchange. It's because it needs to be centralized. We want competition. We do not want exchanges to focus on market data as a business model. So that in that ideal world, there is one exchange. That doesn't mean that all the steps that we need to get there need to be taken. And I think a party like Cboe coming in, I don't know if you will survive. And I've been open to you about that as well, actually, like we always try to do. Maybe it's Cboe in the end who is this one party. Maybe it's Euronext, maybe it's Eurex or ICE. I don't care, and nobody should care, as long as the end investor gets the liquidity that he needs on screen. And I think that's the most important thing with this initiative of Cboe. Whether it will succeed or not, will be successful or not, we'll see. It should bring more flow to the European market, and that's what you expect. I hope you're right, because I think more flow is good for everyone. So let's see how it turns out. But I think we're not that far apart in what we want to achieve. But I understand that you do not want to say there should be one exchange and I cannot make profit. It will be better, but we'll see.
Thanks for that, Martin. Matthias, what about the view of you from say your members actually?
Yeah, just well, some interesting comments I think from Addy and from Martin. I think I can add, all my members also see the divergence in the liquidity picture between the EU and the US, which is a little bit alarming. There are a number of reasons for that, of course: a lack of listing companies, national regulation. I think there's also less appetite amongst investors to for instance, retail investors to invest in options. Amsterdam indeed being one of the exceptions, and for instance the Italian markets, not so much the options but more the futures and the cash equity. But that's pretty much it. So that's a bit worrying, and I think there are some opportunities for exchanges also to do something about it. We've been talking about that for quite a number of years. But for instance, take the crypto space. I think Europe is also behind the curve there. And for instance, in the US, you see CME with options on Bitcoin futures. And that really is something we need to develop in Europe as well. We're talking about regulation with the markets in crypto assets regulation coming out of Brussels, which of course is good that we're talking about it, but we also need to see development in products there. And just to add to that as well, that what my members see and what we see also as an association is that on the one hand, you have a quite strict regulation, for instance, not so much in the Netherlands, but in France and Germany around options. So when you would want to buy an option in Germany, you would need to fill in about 85 forms and contracts. But the same German wanting to invest in his whole fortune, so to say, in crypto assets on a Chinese exchange, that's all fine. So there's a sort of strange divergence in there. And we believe a lot of these structured products are risky because they're not centrally cleared. So we should really do something about the exchanges should pick that up in our view, to show a little bit more that there's also the possibility to invest in options and other derivatives, and much better than these sort of structured products.
Thanks, Matthias. Thanks for that question. Thanks for taking that point. You mentioned crypto assets. I am going to come back to a question which has come in on that area. So thanks to the person who's asked that question. I am going to bring that up in very shortly. If there's any further questions out there, please do get them in. We have a number of points we're going to get through before the end of the session, and it would be great that if we could tie them into a question as well. Now, in terms we mentioned, or everyone's mentioned innovation, competition. There's an argument, how do you innovate without competition? And that's not just in the private sector. We've also seen that in with regulators that have a competition mandate built into their mandates or to their statutory objectives, do things differently than regulators that don't have competition built into their mandates. So when it comes to innovation, is innovation for exchanges only going to be driven by competition, or is there someone out there doing something better and smarter, and that's their competitive edge? So I guess I'm trying to find what is the competitive edge for an exchange in today's environment, and it surely just can't be competition. So it's got to be innovation, but what is it that they need to do differently to be really, when I think about what Martin said, the exchange or the exchanges of the future?
I can start maybe.
Yes.
Yeah, okay. I didn't know if you were stuck.
Oh, no, sorry, yes.
Yeah, so that you were just really sitting still. Yeah, so I think something that we also discussed actually when talking to Cboe is what the interesting thing is what we see, for example, in Eurex, who are trying to change a lot of things on their model to improve the market structure, and we support them in that actually, is that there are so many parties, like I said in the beginning, who say that it's too complex or we should not change too many things just because it hurts their business model. And I think what the nice thing about the new exchange coming in is they do not have that problems. They can launch their product scope in the way they want with the market structure they think is best for the market. And it's so much easier, I think, to launch that from scratch than to have to convince 60 different parties with opposing views, and it's just really miserable, I think. And Eurex is struggling in that. And I think they're strong in well, not pushing through, but at least having a view on and a vision on how the market should be. But with a new party coming in who can just launch what they think is best by consulting with other parties, that's just much easier. And that's, I think, also why the market structure that Cboe is presenting is interesting. Eurex is trying to do the same, but all the parties are trying to sort of block or postpone changes. And at least in my view, that's because it hurts their own business model. And I think that's detrimental for the market.
Point. I mean, Adi, you may want to jump in, and then I want to take a crypto question to Matthias, if I may. So after you, sir.
Yeah, I think to Martin's point, yes, we are starting with a blank sheet of paper. One of the things that we do want to do is we do want to bring market participants along with us. And so I know that Martin's been party to some of the conversations we've been having with a wide variety of participants on what we're doing. We do have an idea of what we want to achieve. We do want to bring market participants along with us, but also we do want decent amount of variability. So we do want a venue where we're getting different participants coalescing around our platform. And so it's not aimed at perhaps a particular type of participant. It should be an open venue, an exchange where participants can actually just be comfortable that the rules of the exchange have been set, everyone understands them, and they're competing on a level playing field. And that's really what we've tried to do here. Certainly hoping that we will bring more and more participants on board and that they'll understand our philosophy. But very much what we're planning here is making sure that we consult with participants, then bring something to market. You're never going to please everyone. It's just not possible in our world, but ultimately to try and have a fair environment. On the innovation question, that's always tricky. And so exchanges will always be looking for new products, always looking for new benchmarks, always looking to establish something new. It is not an easy task. Most new financial products that are launched typically fail. Okay, so you have to throw a lot of things at the wall to see what works. And sometimes it's a dislocation in the market that brings an opportunity. It could be an introduction of a new currency that brings an opportunity. Could be in the crypto space that brings the opportunity. And you've clearly mentioned what's going on in the United States in this respect. And so it's normally something that's happening in the world that brings an opportunity that an exchange could actually look at that product or look at the innovation there and launch a product in an exchange environment. Normally, there's a catalyst for that change. And I think the more nimble exchanges tend to capitalize on those opportunities. I'd expect that to continue as we go through the years and decades to come.
Sorry, thank you very much for that. There's actually a couple more questions that have come in, so I will now jump to those questions in the from the audience. But Thijs, one of those questions that has come in, and maybe this is where what will exchanges do differently, and what other things will they do going forward? A question came in that is on cryptocurrency. And does the panel see much opportunity in the crypto space? I know you mentioned Mika, but you might just want to explain what Mika is, maybe just in one line. As part of your response.
Yeah, so MiCA is the markets in crypto assets regulation, which has been drafted by the European Commission. And I think that's a first step really in Europe to look at how can we regulate crypto and get it more into the sort of mainstream space, which I think is a good development. But then we need to be very sort of aware that we need to keep the competitive edge at a level playing field with other markets, with the US, which I said we're behind the curve there. So not to become too strict in our regulation, which Europe tends to do a little bit around capital requirements, remuneration, where we sort of go ahead of the rest, and which can lead to liquidity flowing away to the US, as we have seen. So, and I think there's also been discussion with between exchanges and national competent authorities about, for instance, crypto futures. Some of those discussions weren't, I understood, not very fruitful. So that's so hopefully that will change in the coming period, and we'll see some innovation in that respect. We've also seen innovation around micro contracts, for instance, with Eurex introducing those. But then that also needs to come along with some education of the retail investors. What are these products like? What sort of benefits can they bring? For instance, as opposed to structured products. So there again, the education should play a part.
And I think it's just fair to say, in case someone's watching this from outside of Europe, this regulation that Matthias mentioned, markets in crypto assets, it's not something being pushed because it's illegal to trade in crypto assets in Europe. It is just applying a type of conduct of business rules to the activity, because these exchanges already exist here. And in fact, the only way they're currently regulated right now in Europe, well, a pan-Europe on a common basis, is through, unfortunately, I guess I say that, I mean that with great respect, it's through anti-money laundering law, when it's just about knowing your customer, but it's actually not about the actual conduct risk involved. There's another, sorry, I don't know if anybody else wants to jump in on that crypto space, but if not, I'm very happy to turn to the next question. So I think this really, I guess, is picking up from a point that you made earlier. The person's asked, we saw record volumes traded during the early days of the pandemic. Do you think this is very interesting, do you think this stalled innovation in the exchange landscape? The old saying goes, if it ain't broken, don't fix it. So if you're making money, what stimulates you to innovate?
It's an interesting question. Yes, there were record volumes during the pandemic, but we all know why. Volatility led to more trading activity, more participants either hedging their portfolios. So do I think that this has stalled innovation? No, I don't think it has. Having worked at certainly a number of exchanges are looking all the time at new products, what they believe would be successful. And so from an innovation standpoint, exchanges look at this day in, day out. Their product development teams are looking at what they think would work, and then going out and consulting with participants as well, trying to gauge whether or not there's interest. And so I don't actually think innovation has stalled, and nor do I think it will stall. I think there'll always be exchanges pushing the barriers, trying to find something new. What else would market participants want to trade?
Sure.
Yeah, same goes for market makers. I think we had the firms that made a good profit due to last year. They are very much looking inwards, like how can we maybe enhance our teams, make them better, and also looking outwards to markets where they haven't looked before. Maybe the US, we see quite a lot of the smaller Dutch market makers were pretty much EU focused and maybe even Amsterdam focused, now looking to these markets as well. So this gives room. The profits made give room for that, and that I would say is innovation. It needs its expansion, which is good because it can improve the liquidity picture in the end.
I think stalled innovation is often more because parties want to protect what's good for them, instead of an exchange not wanting to innovate. It's just like Eddie said, very difficult to please everyone. You cannot, and that's why it's extremely important that an exchange has a vision themselves and that they really know what they're talking about, because you can be easily convinced by someone with a completely false argument, and that happens all the time.
Yes, no, thanks for that, very much for that. I think they're all excellent points. What reminded me, what I was reminded of as you were talking is, for those of you that do get a kick out of reading regulated speeches, do have a look at Stephen Major's speech there on the 23rd of March, about where he sees ESMA, the Pan-European Supervisory Agency. And these agencies are becoming regulators more and more than just coordinators of national competent authorities, where he says that over the next 10 years for his office, it's going to be very important to build ESMA's resilience and adaptability in response to two macro trends, which are increasingly impacting the financial system, both in the EU and internationally, digital finance and in the EU, which is digital finance as one, and sustainable finance. And it would be remiss of me, having said that I just don't very briefly ask, what is the appetite? Where is ESG in this whole discussion about the future of exchange landscape? Would anyone like to jump onto that, please?
I'd certainly like to comment. No experts in the ESG space, but one thing I will say is this. In many respects, this runs contra to my first slide, which showed growth in US and stagnation in Europe, which is, I actually think this is an area where Europe should, and I think potentially will, lead the world in ESG. I think it very much plays to Europe's strengths. Europe is, I believe, the leader in the ESG space in terms of thinking about sustainability, thinking about what the world should look like and will look like in the future. From a derivative standpoint, however, there are products available on, I would say, most exchanges today. Certainly Cboe in the US, we have options on the S&P ESG index, and I'm pretty sure other exchanges have ESG products available as well. But ultimately in the ESG space, is it just going to be about futures or options on indices, or is it going to be something else? Is there something new? Is there a new way of thinking about what we ought to be offering the marketplace with an ESG label? And I think this is where, I think it's still early days for us at the moment, but I think Europe will take the lead here in the same way it has with Paris climate change agreements and so on.
Yeah. Okay, thanks. That's very interesting. Europe may take the lead. Anyone else?
Yeah, I totally agree. Just a short mention, and what we as market makers are doing. We calculated that the volume traded in ESG products by Dutch market makers was around 16.2 billion in 2019, and that's growing every year. So I think there are large and many opportunities for that as well. And what we also see is that some of our members, they stimulate the launch of an ESG product like the Euronext Eurozone ESG large 80 index future. That was one of the larger market makers was involved with this as well. So I think that's acting in concert in a positive way between the exchanges and market makers can lead also these to these products, making them liquid and attractive for the market.
Great, thanks for that. So I'm sure there's other commentators going through the rest of the event. We'll be talking about ESG, so we'll leave it there for us. Another question that's come in has reminded me actually again of a presentation by ESMA, again on the same date, way back on the 23rd of March, seems like an eternity ago. Klaus Luber, who said, he was talking about ESMA's central, the CCP supervisory mechanism, central clearing, the central clearing counterparty supervisory committee, which in Europe is sitting there to provide a robust supervisory structure. I'm looking over here because I'm reading it from the screen, a robust supervisory structure to respond to challenges and emerging risks, including the risk of systemic relevance for the union as a whole. So they are met with corresponding mechanisms enabling a coherent EU-wide perspective and response. Very much sounds like a regulator public servant type statement. It doesn't give us a whole lot of clarity, but it gives us a statement of intent. Questioning from the audience. In the US, all options and exchanges have only one CCP, which this person says is the OCC. In Europe, derivative exchanges all have their own CCP, which is correct. Should Europe move towards one unity type CCP like the US to increase competition between EU exchanges?
Yes.
I'm happy to throw that out to anybody who wants to put their hand up and have a stab at that.
Yeah, I think it's obvious that it should happen. It's I don't think I'm not sure what you guys think, but I believe it's not even should not even be a discussion. It's working there. We've seen all the volumes. We've seen everything. Actually, Cboe is doing it now for their own products then on one centralized clearing.
Yeah.
Makes it so much easier for everyone. So why make it so complex? Why if you already have fragmentation on the trading side, then make sure that on the clearing side it's not there. Nobody benefits, I think.
The issue that we have in Europe is exchanges already have clearinghouses. So we have a number of clearinghouses already in Europe, which where you can trade single stock and index options. And so if we are going to move to one OCC style clearinghouse for Europe, which one is it? Does that mean that the existing clearinghouses then consolidate? That's highly unlikely to happen. Or does a new one get built and get capitalized by market participants?
That breaks the purpose of discussing what should happen. Right? This is always the response. If there's a good idea, then because that it's already there and fragmented, it's not going to happen. But let's say we redesign the whole landscape.
Yeah.
How would it look like? What would be the best? And let's start from that perspective, and then check how can we make it happen instead of the other way around. Yeah. Otherwise, there will never be change for the better of everyone.
Matthijs, you coming in there?
Well, at least I think looking at the Cboe derivatives initiative, the launch in September, I think it's very positive that Cboe has the Euro CCP behind it, of course, which also gives the possibilities for cross margining between different asset classes and optimize post trade. That's not something we're seeing with Euronext, for instance. So that could be a positive element for Cboe as well, and maybe see developments the coming period on this as well.
Right. That's great. Guys, I've got two more questions that are sitting in there, but one thing I think we should just address because it did come up in the introduction, and that would just be around the point of acquiring data. Now, you've mentioned it, Martin. You mentioned it, Matthias, I think, at the start as well. Acquiring data seems to be a big driver behind market consolidation. Is this the advent of a new business 3.0, or are we just seeing diversification in order to survive and smooth out risks?
Last one, I would say. I think the exchanges have been doing it a long time. So the income because of trading has dropped, and market data income has increased, and it's understandable because trading volumes are volatile. And the market data is much more a subscription model. It's lucrative. You're in control of what's coming in. And you see it as well that the bigger exchanges, take LSE for instance, it's not for nothing that they have acquired Refinitiv. That gives them the possibility to become more sophisticated in their data supply. The same thing happening with intercontinental exchanges and LMA on another front, but it's the same basic thing happening. And it's a little bit of a worry for market makers because we see these costs going up and up and up. And of course, that's a little bit from our own standpoint, but we do see it, especially market data, as something we as liquidity providers also co-produce. And then we really have to pay such huge sums. So their competition, I think, can also help to bring that a little bit down because also regulatory scrutiny by ESMA we support. This is something that should definitely be looked at because the end investor will not profit from it as well when these costs keep going up.
Okay, and gents, we have a few minutes left. Just very quickly, there's a question which has come in, question number 4. I don't know whether it was Martin or Matthias who said they would love to address it. It was the one about the ultimately one big exchange. If we could get to ultimately one big exchange, would there be a need for multiple market makers, as most likely it would all be a low latency game? Just a very quick response on that.
That must be Martin. I would love to answer that one.
Yeah, so in an ideal world, you do not have market makers. Because why would you need a market maker if people or investors can interact with each other on their orders? Until we are there, I think there will be a need because it's not very likely that two investors meet at the same time with an opposing interest to trade. I think that's why there is a market maker to be the oil of the trading actually. And the last part of that question, it's most likely will be a low latency game. I think that's actually the opposite. So currently it's a lot of low latency game, and if exchanges focus on the variety of investors, liquidity providers, etc., then you should actually make sure that your market structure is structured in a way that everyone can enter in a safe way, and that you do not have this low latency game. And that's what I also mentioned in the beginning. I think there should be no low latency game at all in the options market. Fair
enough. I'm actually going to now just use this as to wrap us up. That's your sort of closing point there, Martin, as well with the last question. Is there anything you'd like to add around about the listed options market? Cboe is going to grow in Europe. Is there anything you haven't mentioned you'd like to mention in the last 20-30 seconds? And then I'll turn to Matthias for these last 20 to 30 seconds before I say goodbye to everybody.
Only to say that we launch on the 6th of September. We do believe we'll be bringing change to Europe, but positive change. Most of the US participants I've been speaking to love what we're doing over here in Europe and are looking forward to trading on this new platform. So it'll be net new business to Europe.
Net new business to Europe.
I'll leave it there.
Thanks very much, Matthias. It's 20-30 seconds, and then I'll need to do the wrap up.
Yes, would want to wish Cboe good luck with the launch. Very much supporting that. We believe in competition, innovation, and hope that can bring change and positive change to exchanges in Europe.
Well, thanks very much. There was an additional question on ESG, but it was, I think we probably addressed that, although it was a very good question about greenwashing. Gentlemen, I'm not going to volunteer that you'll accept every LinkedIn request that you'll receive, but all of you are on LinkedIn. So I'm happy to suggest to people they do reach out to you. But if you do reach out to anyone here, please please do send them a message in your connection request so they have some context for the connection. I'd like to say thanks to the audience. Thank you very much for your questions. Again, Adi, thank you to you, Sir Martin, and to Matthias. Thanks to FOW Global Investor Forum and all the sponsors that make these events happen in this new virtual world. I think that's about it from me, and over to Philippa.
Thanks, Peter. That was a really great session. Again, just reiterating, thank you to our panelists for sharing their thoughts on the future of exchange groups. It was a pleasure to listen to you all. It's break time now, but we will be back at 12:15 for our closing session of day one, China testing of prototypes. All eyes look to Asia. We will see you then. Thank you, everyone.